You and I have talked about infrastructure so much, but I almost consider names like TSMC and ASML as being kind of soft data sets rather than kind of hard data sets. ASML gave us one signal, and then TSMC gave us another. As somebody that looks at their exposure to this AI supply chain, what did you make of it?
Well, I think you really have to go up to kind of the higher order of capital expenditures, which is impacting so many different semiconductor stocks. If you look at the top 4 builders of infrastructure this year and combine them with energy and utilities companies, all of that CapEx equals the rest of the S&P 500 combined. So you're just seeing so much investment from semiconductors to energy and power sources across this AI megaforce that it's really providing a ton of ballast to these stocks as we enter into earnings season.
I think we'd agree that AI is having a profound impact on markets. That's probably an understatement at this point. But when you consider the ETFs you're managing, where do you see the enthusiasm, or where do you see movement of investors wanting to be exposed to what's happening?
Well, if we look more broadly at what's happening in the markets this year, themes are really displacing sectors as having the most explanatory power of what's happening around us. Artificial intelligence and baskets of stocks related to that explain a lot of what happened in February. If you look at geopolitical fragmentation and companies in the infrastructure and defense space, that explains a lot of what's been happening since April. So themes themselves have a ton of explanatory power in the markets. To your question, where are we seeing some of the most excitement in artificial intelligence? We continue to be looking at the build out of digital infrastructure. We know that we are still in the build phase of AI. This is where you're seeing hundreds of billions of dollars of capital expenditure to build the best models, to make them smarter, to make them more scalable. That's where we are today, and that's where a lot of our active portfolio managers, like Tony Kim, who manages BAI for us, has positioned a lot of his portfolio.
BAI is super interesting. We just showed it on the screen, but the ticker BAI. There's this $2.2 billion of interest. You can quantify it. What are the main factors behind that, do you think, Jay?
Well, I think a lot of investors are looking at artificial intelligence, but realize they don't really have great exposure to it. In fact, we looked at over 10,000 portfolios by financial advisors in the United States, and about 95% of whatever AI exposure they have in their portfolio is coming just from the Mag 7. So maybe it's because they own index funds that are just broad market in nature and getting that Mag 7 exposure. Maybe they're looking at tech sector and getting Mag 7 through that. But so little of their exposure is to the broader AI value chain across digital infrastructure, power infrastructure, applications, data owners, that we see a lot of investors are more intentionally allocating to AI, selling down tech sector exposure to allocate to a fund like BAI, or even selling down core exposure in U.S. large caps to get exposure to a fund like BAI.
I find this sub-theme of onshoring into America and basically re-industrialization really interesting. Is there a sort of specific basket of names which you would not necessarily feel are the technology sector? I'm thinking a little bit like real estate and all of those names that are involved in the construction of a data center.
There's a few areas to look at. One, we just broadly really like U.S. infrastructure names. We've seen some good flows into IFRA, which is a U.S. infrastructure ETF, because if you want to build semiconductors in the United States, or you want to build, kind of high-end technologies like electric vehicles, you need roads, you need highways, you need airports, you need ports, you need electricity on the grid, you need waterways. It really takes a wide range of infrastructure to set up these very expensive and complicated manufacturing supply chains within the United States. So we see that physical infrastructure and digital infrastructure being a really common denominator here. But if you really want to kind of double click into one area, if you look at semiconductor equipment manufacturers, this is kind of the highest upstream way to play more semiconductors being built in the United States. The semis equipment manufacturers should do quite well, and that's an area we have exposure to in our manufacturing ETF, MADE.
Let's bring it back to the news of the day, which is TSMC. And one of the themes that came up was currency headwinds. And it was really interesting because, in simple terms, TSMC is a Taiwanese company that books revenue in US dollars, but it operates in Taiwanese dollars. I give that to you, Jay, to kind of illustrate that this is a name that if you're an American investor, even though it's Taiwanese, you can still get exposure to, but it's a company that's increasingly looking to the US for its own investments and to build out more of its own capacity here onshore or domestically.
Yeah, that's right. What we've seen is, a lot of volatility in the dollar, and the weakening of the dollar generally has, boosted international stocks. In fact, just if you look at a lot of what our investors are doing today, it's allocating to international ETFs to benefit from the changing position of the dollar. So I think we're going to see this more and more this earnings season. Currency is going to be an important factor as companies try to explain how their earnings have done, and there's just a new element to back out of with dollar weakening.
Jay, we're a few weeks now into the second half of the year. What are you expecting and watching for most closely in the balance of 2025?
Well, we just published our thematic mid-year update on iShares.com, and we're really looking at kind of the evolution of two areas, artificial intelligence and geopolitical fragmentation. In AI, what we're looking for is continued breakthroughs in the intelligence of AI. Right now we would say AI models are kind of college level of intelligence. I think we're on the precipice of master's degree level of intelligence of AI, and that should really boost even more adoption. On the geopolitical fragmentation front, we talked about infrastructure a bit. Defense spending is still very much in focus, but also even if you just look at things like people buying gold, a lot of diversification into monetary alternatives. It should be a pretty big trend we see through the end of the year as well.